All right. Welcome, everyone. This is Mark. How you all doing? Thank you for joining me for another Greenbridge Investing Market Analysis. This is a live stream, so I appreciate you taking the time to listen. Now, if you're new to Greenbridge, make sure that you check out our website at greenbridgeinvesting.com. We do have a swing trade signal service by text and email. We also have a portfolio analysis ideas that we share and analysis each day in our chat rooms. So with that being said, let's get this thing moving. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, if you'd like to see a particular stock or a particular market, now would be a good time to share that in the channel. So once I run through my analysis, we can get to what you want to see as well. Okay, so now today's title obviously has to do with the US dollar. And the reason why I'm emphasizing that, in this environment, we've seen a lot of inflationary measures by the US government, all right, all the stimulus, all this other nonsense. And that's very typical. I've seen this type of stuff before. Hey, Joe, thanks for joining me. Oh, and by the way, if you're new to the channel, make sure you register for the channel so that you get email notifications from YouTube when I do one of these, and press the like button if you like it. Now, so like I was saying, this, every time there's some kind of economic problem, the US government and other governments too, they use inflation as a tool to stimulate things, right? They print a lot of money, they keep the economy, they stabilize it the best way that they can. But what people don't realize, especially all the people that like to write all this crazy stuff about gold and all that, is that the US government is not going to let this thing get out of control, okay? At some point, they will probably start inching toward raising rates. Now, not anytime soon, but the FOMC meetings are, that's where you'll get the hints, okay? Or surprises. But the point is that right now, this is what I'm trying to get to. Excuse me. You can't go by fundamentals, okay? That's the point. That's the main takeaway that I want you to realize. Fundamentals will steer you the wrong way because things change before they reach the fundamental surface. We can see those changes on a chart a lot of times. And that's why I didn't forget, DJ. I didn't forget. I just wanted to mention this fundamental situation first because this is a very common thing with forex, especially with forex traders. If you go to a forex website, you're going to see all this stuff about economic this and economic that, and you need to be an economist and blah blah blah. But the reality is you don't. If you understand what you're looking for in a chart, all charts operate under the same basis, okay? The tendencies of greed and fear drive every market. I don't care if it's Bitcoin. I don't care if it's a currency. I don't care if it's a stock. It's the same concept. So my point is these dollar, excuse me, these dollar-based currencies, okay, meaning USDCHF or USDCAD or anything with USD as the base, these things are in a location to bounce, okay? And I mentioned the fundamentals because the first thing people are going to say is, well, but fundamentally, blah, blah, blah. But it doesn't matter, all right? Now, the thing is, we like this dollar Canadian, and we shared a trade earlier. Hey, Michael, we shared a swing trade earlier on this thing, a swing trade idea that you should have received by text and by email. And I believe the trigger was 34.50. Okay, to get into that thing, which this thing touched. The high here is 34.51 today. Now, some people argue and say, but we're in a bearish trend. Okay, yeah, we have a series of lower highs, but we don't have a lower low. Number one, this is a double bottom. Number two, the broader structure is not bearish. Okay, as you can see, dating back to this move here, that broader structure is what is in play. That is the reference point. That is the structure that guides our thinking going forward, not fundamentals. So, yeah, well, I mean, this thing has a lot of potential. This thing has a lot of potential. Even if the dollar Canadian retraces halfway or even retests these old highs at this 37 area, okay, which is very realistic. It's very within reason. We're not even talking about, way up here. But my point is the dollar just moves like anything else. It finds a low point and then it retraces like anything else, okay? And that's what we're looking to play here. Yes, we're going against the fundamentals. Yes, this is a counter trend trade relative to the euro, relative to the pound, all right? Because those are strong currencies. But we're looking for, here's what people need to understand, especially when they get all caught up with fundamentals. As a short-term market timer, I'm only looking for momentum, and that momentum is likely to take place over the next few days or maybe the next couple of weeks. That's my scope of time horizon. That's all I'm interested in. I don't care where this thing is in 6 months, okay? So that's the setup. We see, so our trades are based on price structure and setup. That's where we gauge our probabilities from and our risk. So based on all that, again, I'm bringing up the dollar Canadian here because we have the double bottom, which we like to see. That double bottom is a broader higher low, which we also like to see. So we're stacking probabilities in our favor. And then we had this bullish candle on Friday, right? This outside bar, sort of. Yeah, it's an outside bar, which is usually like the beginning. All right. Now, of course, we're fooling around here. It's looking, you could say, oh, bearish pin bar. Okay, true. And it may retest that low. Maybe it goes slightly lower and give us a failed low. But the point is, we're playing the probability of the location, and this is a reflection of the US dollar. Same with dollar franc. All right, so I'll show you dollar franc real quick. It's the same idea. The only thing that really separates them is, whatever's going on like in the franc, whatever's going on like on the franc side of the equation or the Canadian side. I mean, look at dollar franc. This was a better pick, sort of. Okay, the dollar franc this is like an inverse of the euro dollar. And what I liked about this this currency pair is the failed low situation, because you have this low back here that was made at, what is that, like 91.82, and it was in that zone. So probability favored this type of price action. So that's what we're playing on the Canadian. This is all a probability game. Anyone that thinks it's anything besides that that's why you may have problems or be frustrated with your performance, because you're putting too much weight on factors that are irrelevant. This is probability, and the probability isn't just some random number we come up with. The probability is based on human behavior, okay, which does not change. All right, so I just wanted to run that by you, the dollar pairs, and the fact that we're anticipating a bounce in the US dollar, even though it goes against economic fundamentals, because we're not playing fundamentals, we're playing human behavior. All right, so let's move on. Now, DJ, thank you for the reminder. See, DJ is very sharp. You can't pull one over on DJ. Today is Monday, and on Monday we look at the economic calendar. All right, so let's take a look. The reason why this is so important, again, is we're not looking to react off the economic calendar. What we are looking for is we want to be aware of any major reports that can lead to a random price expansion, is what I like to call it, because it can expand either way. People make the mistake. I even see websites encouraging reacting. Oh, the news comes out, you react. No, you don't react. That's what leads to inconsistent results. What you want to do is anticipate. So we want to be aware of any news, especially since we're involved with forex, because this is really where it's most important. All right, so what we're looking for on this calendar are really any kind of interest rate announcements or stuff like that, okay, or unemployment type stuff. So ISM manufacturing PMI, this is really not a big deal. Was this today? Yeah, no big deal. Retail sales for Australia. I mean, these aren't major market moving reports. Now, the RBA interest rate decision, okay, that is a market moving report, but that's Australia. We don't have any Aussie dollar pairs, so we don't really, this is not going to be a big deal for us. But if you're involved in the US, in the Aussie dollar, or even with Australian stocks, this can have somewhat an effect on it. So you want to be aware of that, right? So they have their rate statement. New Zealand has their unemployment rate. Okay, I mean, they're not a big market mover to begin with, all right? It's just the way it is. So European retail sales, no big deal. US, ISM non-manufacturing, no big deal. Now, the Bank of England, this is a market mover right here for the pound, all right? Any kind of pound pair, they're going to have their interest rate decision. What is that? On 8/6. So that's in 3 days. What is that? Thursday? All right, something like that. What is that? Today is the 3rd. Yeah, I think it's Thursday. The thing is, something like this, if you're in the pound, and the pound is something we watch. We've had a number of trades in the pound. This can also affect the euro. So that's something to be aware of, all right? Which means, here's how this works. If we have a trade set up in the pound, or if you're even on a smaller time frame, let's say, maybe you're position day trading in the pound, you need to know that this is coming out because this can change things really fast, okay? The ideal outcome would be a non-event, meaning it's no big surprise, the market doesn't move, and you just, continue about your business. Let's see, anything else here? The MPC vote, okay. Governor Bailey speech, okay. These, I mean, again, that's all part of the same report there, and it all comes out at the same time. So good to know if we see any setups in the pound, possibly the euro as well. Now, we have Australia monetary policy statement. That's also on Thursday. Okay, then Canadian, net change in employment. Now, look, we're involved in the Canadian. So we need to know about this here. What is this, Friday? All right, their unemployment rate. I mean, again, these aren't huge reports, so I wouldn't expect really a dramatic move, but it's good to be aware of. Non-farm payrolls. This is important. Okay, this is probably the most important report for the whole week is non-farm payrolls. And that's, obviously the US unemployment, that's the first Friday of every month. This right here, besides an FOMC meeting, is the biggest forex report or the biggest market, scheduled market moving event that we can possibly see. So definitely want to be aware of that for not just forex, pretty much this affects everything. So we want to know that, and we want to adjust if we see, depending how we go into Friday. Typically, volume tends to shrink going into this report because no one wants to take any big chances, depending on what their expectations are. Again, the ideal outcome would be non-event. So we'll see how it goes. But we want to know that this is coming out, all right? First Friday of every month. So that's this week. I talked about the Canadian here and the dollar franc. Now, let's go into our regular group of markets, and then I'm going to get to the questions that you have here. So again, guys, if you have any specific stocks, I see I have a bunch in the channel here. Let me know what you'd like to see, and I'll go over it. We're going to start here with Bitcoin. And by the way, if you're new to the channel, make sure you register, subscribe to the YouTube channel here. And if you will like the video, like it. All right, so I know it motivates me. All right, so Bitcoin. Now, Bitcoin is in an interesting situation. How many of you guys took that swing trade from 92.25 that we sent out like back in June? Did a lot of you guys participate in that? Because that was a beautiful move, okay? Our third target was reached at 10,600, which we were happy about. And the thing went a lot further. All right, what's the high here? The high this thing went to 12,000, all right? We got out at 10,600. Were we upset that we left some money on the table? Not at all, because we took a reasonable amount of risk. The market paid us, and we're done. That's it, all right? Now, the mistake a lot of people make is when it hesitates a bit and the next leg starts going, people start to react. Now, I sent out a tweet the other day, and I wrote a report on TradingView about this resistance zone. And this zone, cool, guys. I love to hear when you guys get into these trades, because this was a great trade. Yeah, this was a great trade. It doesn't always work out like this, as you guys know. But the point is, a lot of people ask, people that are new, people that did not get into the trade, like you guys, people that did not get into the trade, missed it, they see the next leg developing, and they don't want to miss out. So it's human nature to feel like, oh, I'm going to miss out. Plus, you go and you read all these blog posts and everything else about, oh, it's going to 20,000 and all that nonsense. Meanwhile, the probability of the location was not favorable. And that was the point that I was making. This is not a location to buy. All right, these lines on the chart, you see that? This is what, 11.6 to, what is this high here? 12.2, around there, 12.200 area. That zone is a low probability area for longs. So what do? You just stay away from it. Some people say, well, why not short? Well, because then you run into this problem here. You know, if you took a day trade and you managed to take a piece out of this outside bar, great, that's great. But if you go into this with a larger expectation, you know, you take that short and you're like, oh yeah, this thing's going to, you know, 8,000, you run into this problem right here. All right, you're fighting a strong market. And that's the other key takeaway here is, you know, for one, we don't short Bitcoin to begin with. But for two, even though a market is set to pull back, counter trend trades are hard. Okay, now our long in a dollar Canadian is obviously a counter trend trade relative to the dollar, but we understand what we're doing with that and we're looking to capitalize on that quick bounce. Something like Bitcoin, you're fighting that trend. And in order to compensate, there's two ways to compensate for having those factors working against you. One is smaller size. Two is the smaller time frame, okay? Meaning you're on like a day trade type of chart. If you're not doing that, you're just asking for trouble, all right? And now you get this inside bar, bullish inside bar. If it takes out this high, which is what, 10.9 area right there, if it takes this out tomorrow, it's likely to push back into this resistance zone again. But are we willing to take something like that? It's very aggressive because of the location, but depending on how this inside bar closes, we're open to the idea. Obviously, it'll be 1% risk and that sort of thing, you know, and that's something Andrew, you know, we'll talk about. I'll talk about with Andrew to see if it's worthwhile to send something like that. Sometimes we see these setups and we're like, you know what? This is just not appropriate. It's just not an area that we would get involved in. So why are we going to share that with others if we wouldn't get involved in it? So we'll see how that unfolds. But we're open to the aggressive idea. It may be worth something. It's just the potential, because of this resistance zone, I'm not a big fan of that. But it doesn't mean it won't break through. All right, we have to be open to anything. So I just wanted to run those ideas through, you know, about Bitcoin. I wanted to run that by you guys. The ideal situation that I would like to see is a retrace to that 10.5 area, at least somewhere around there. That would be a much more comfortable place for me to share a swing trade long idea and get involved with it, because at least it's a technical inflection point. And I like that because probability, I know that the probability is better there and the reward risk is much better as well. So we'll see how that plays out. Now, real quick, I want to just put something like, I want to put Ethereum in here because Ethereum has now become, you know, more favorable for swing trades. For a long time, this thing was just basically garbage, right? Now it's broken out and now it's in play again. This is great. So yes, bearish pin bar the day before, and it's not stopping this market. Is this a place to buy? Of course not. We're not going to buy it here. But we see a retrace, we will be on this. All right, so this is what puts it on our radar. We don't react to, oh yeah, look, it's on the high. It's safe to buy now. No, that's reacting. We don't do that. We're anticipating, meaning we want to see a better level and we want to see a setup where we can measure risk from. That's anticipating. And if the market meets our criteria, then we can justify the risk. Otherwise, we step aside. I don't care if this thing runs to 500 tomorrow. I have no interest in it because the key is knowing that the probability of the trade, how would that work out if I took that same trade 100 times? If more than 50% of those times are going to be negative, then why am I taking the trade? Okay, because you know there are occasional random rewards, but I don't want random rewards. I'm looking for consistency. So that's Ethereum. All right, let's get into one more. All right, and then I'm going to get to you guys here. I want to go over a couple of stocks that we've been involved with, like, for example, Workhorse. This was a swing trade idea. This was a play of the week idea that we sent out a couple of weeks ago. This thing's working now, talking about working. Imagine all the jokes going on about Workhorse. Look at this thing. Nice, right? You can see the trade information back here. And this, remember, Michael, you asked about this one. Should we adjust that buy limit? And remember, I said no. No, we're not going to adjust the buy limit. And this thing filled at our price at 15.85. And now this thing is rolling, right? Now look, today's high is 17.91. Our target's still a little higher. We still have a little ways to go there. But at least the trade is now working. We have this nice bottoming formation. And, oh, nice, nice. ADVM, that's another one. Yeah, I'm just basically going to go over real quick some of these performers that we have here. And look, this is a nice candle. The stock market's strong, and we have a nice broad high or low here. I don't see why this thing should not be touching its target in the next couple of days. At least this week, we should reach the first target, in my opinion, based on this structure. Okay? So, you know, again, and we sent that one out, you know, as a trade of the week, which means everyone got that one. So I'm glad to hear you guys are in that. So let's check out ADVM, which is another one that we sent out. Now look at this. This one was not a trade of the week. I sent this one out, what, on Thursday, I think, by text. I think it was Thursday. And you could see the order information there on the chart. Okay, 17.25 was the buy stop, and that was based on this level here, this blue line. What did I like about this? Well, look at this chart, right? High or low situation that dated back to, what is that, May? There's a gap there. Actually, that was an old resistance that dated back to like February, and it's finding support now. Broader higher low, failed low situation with the recent candles, and now this thing is starting to push, right? The buy stop was 17.25, and where are we right now? 18.05, not bad, okay? Target one is 18.25, and we're very close to that. Someone asked me about this, and the question was, why put the buy stop at 17.25? And by the way, at the time when they asked me, this thing was around 16 something or 17.05 or something like that. And they asked me, why did you put the buy stop at 17.05? I mean 17.25 rather than 17.15? And my answer is, we make these things work. Okay. A lot of times there's noise, as you guys know. These things will tap you into trades and then just mess around and stop you out. We try to minimize that noise, and one way to do that is by making the market work. We do this with Bitcoin all the time. We don't put the buy stop exactly at the top of the previous candle. We make it work a little bit more, okay? And that's how we do that. So, okay, so the other one that we have been, this was ADVM, and I think there was another one in there, Workhorse. You guys know about Jumia, JMI. I know a bunch of you guys took this one. This was a huge winner. I don't have the trade information on this chart, but I know a bunch of you guys got this. All right, so I think that's pretty much what I got. Let's go over your charts. So what do I have here? Work. That's time. So this thing is on its way, right? If you're not in this, you're kind of chasing it now. So what's the high here today? 30.73. So risk can be measured by 28.03. I would not like to buy this right now and then watch it pull back. The way you can compensate is by taking a smaller bite. But the thing is, you know, you're buying into the move that really you should be looking to take profits, or you should be looking for targets, at least as it pushes toward this range high, which is 34, right? So that's the thing. I mean, the risk and reward is a lot less attractive here based on this recent structure. Now you could say, well, what if it goes all the way up to 40? Or what's this high up here? Yeah, like 40. What if it goes all the way up there? That's good reward risk. Right, but you have all this to deal with, and you're not getting the most opportune prices, you know? So if you're in it, this is good. If you're in it, I'd be looking to take profits. Once it starts pushing the middle of this range, that would be a good place to start taking, you know, locking something in, all right? When we say take profits, we always talk about partialing. You'll see Andrew talk about trimming out profits, partialing out, because you want to let a winner run. So even if you're not holding the full position, if you're holding a part of the position, at least you're still benefiting. And some people, you know, greed steps in, and some people will say, oh, you know, I had 100 shares and the thing ran 20 points. You know, imagine if I had all 100 shares. Right, but imagine if it pulled back all those points too. So you have to look at it as you're still making money, just not as much. You're never going to get the most. Everyone says, oh, but I could have made this. I forget what you could have made. You're never going to sell the top. You're never going to buy the bottom. If you're participating in something that's running, that's free money, right? You're reducing risk as the market is continuing to pay you. So what if it's less? The idea is consistency, not the amount, okay? Everyone focuses on the amount because that, again, that's human nature. I want to make, I want to make $500 in this trade and blah, blah, blah. That's human nature, and it does not work. It will not help you in the long run. All right, so that's Slack. I like the stock, just not right now. Let's see what else we got here. Can you have a look at FTSE, the FTSE, the FTSE, as they call it, right? The Financial Times Stock Exchange. Now, I don't know what the symbol is for that. Let me see. Is this this is in pounds, I believe, right? I don't know if I have the right symbol here for the CFD. Do you have the symbol for that one? I'm sure this chart is probably similar to the CFD. And something like this, for one, you have if this is similar to the CFD, I don't need the exact chart. As long as this is similar, I can get something out of this here. So for one, this is going to follow probably things like the S&P. In fact, this is behind the S&P and NASDAQ. It's acting relatively weak. But you do have a consolidation here, okay? And you also have, these prices aren't, this chart is a little messy, so this is probably not the most accurate, but you do have a failed low situation followed by some strength today. So if anything, this is a buy signal off of a consolidation low or range low. UKX, okay, here, let me take a look at that. Hold on. UKX. Ah, there we go. Oh, okay. So that's the all right, it's the same. So okay, that's what I suspected. The same chart, very similar chart. So I can use these numbers if these numbers make more sense for you. But the point is, you get this outside bar situation today, and it's off of a range low, a consolidation range low. So I think. Oh, yeah, well, this is not a bad place to be long, all right? Your risk can be measured by this range low, which on this chart is 64.55, that 64.50 area, and your potential is decent. I mean, the potential of this thing reaching the middle of the range is within reason, and you're looking at what, 60, basically like the 69 area, low 69s. That would be a good place for your first target, something like that, or maybe slightly lower. This thing, and it's possible that this thing can even test a little higher for a possible failed high situation. This is also, excuse me, going to be dependent on how the S&P behaves, but the stock market, there's just no question, it's strong. Do I suspect that the stock market has to pull back at some point? Yeah, but until it starts to provide evidence, it's just strong, and we have to stay out of that thing's way, even though we have a couple of shorts on. With the Qs, the Qs and what's the other one we have? I think we're still in that DAX. I have to check, but this is in a good place for a long, all right. And this thing definitely has some potential. So if you're interested in this one, yeah, I can see that. What would turn this thing the wrong way is if you get bearish candles tomorrow or the next day taking out this low. You close below this low, the 64.5. Then this is probably one you want to just avoid because it is relatively weak compared to the S&P and the NASDAQ. And if they pull back, this thing will probably pull back in a more dramatic way. All right, just something to keep in mind there. All right, so let's see what else we got here. If you have a chance, take a look at XSPA. Sure, Michael, let's take a look. XSP, oh, no, it's not X, hold on. XSPA. By the way, we have our webinar today at 4:05 p.m. Eastern Daylight Time. That's in about a couple hours. We'll be running it on this channel. Hopefully our sound quality will be better. I want you guys to be on top of us with that sound quality. If something sounds iffy, let me know because I have to let them know. The sound quality comes from them. All right, so I have to stay on, and I can't, the thing is I can't hear it. So you guys need to stay on, help me out and stay on top of that if if you guys join us for that. We have some cool things to talk about there, especially with the stocks. All right, so Express PA Group. All right, nice inexpensive stock here. Interesting. So I like this initial move. Nice push. This is day trader type of activity when they go nuts like this. When you see this type of gapping and it's going nuts, this shows up on every single day trader's radar. And they all pile into this thing, and then, this is why it's a bad idea to chase these, because you have to wait for this. Now, you had a nice retrace. We can count, the Elliott waves are very clear in this, by the way. We have wave 1 here, wave 2 here. This is a wave 3, very clearly, and this is a wave 4, very typical. Now, people that are very uptight about Elliott wave will say, no, this is not a wave 4 because it overlaps over here. Actually, no, that's not right. Wave 1 is over here. I'm sorry, never mind. I got distracted by this thing. This is the wave 1. So it does not overlap. If you overlap, what I was getting to is if wave 4 overlaps wave 1, then it's not an impulse wave, which is a very, very important rule for Elliott wave. But sometimes they may slightly overlap. And that's what I'm saying. These uptight Elliott wave technicians, they'll say, oh no, but you cannot be really, really strict with stuff like that because the market needs room to breathe. But anyway, we don't have that situation. We don't even have that conflict with this. So wave 4 is complete. You have wave 5 in play. All right, now this situation here, this is not a place to buy because you're pushing right now, okay? So you don't want to chase this. If this is truly a wave 5 should be made up of 5 subwaves. And I would want to see that wave 2 pullback, okay? Now that wave 2 pullback can take you to like a $3.50 area, something like that. It could be small pullback. I would like to see that followed by an inside bar, something that says, others are buying. And as long as you don't push this low, which is $2.55, that's a decent reward risk, because your risk will be about perhaps $1, perhaps $1.50, and you have all this reward potential. And let's say, forget this high up here. Let's just say, you go up this far, looking at like 689. So if you're buying this around the mid 3s or somewhere between 3 and 4, and this thing pushes into the 6, that's a pretty decent return, considering you're risking $1, $1.50. So that's definitely close to 2 to 1. All right, and that's not even expecting new highs. So I would definitely keep this on the radar for that. But this movement right now is not a movement that you want to chase, because why bother when this thing can pull back? There are plenty of other opportunities out there that are offering better setups and better situations. So great one for the radar. Thank you, Michael, for pointing this one out. And by the way, if I answer one of your questions and you're still confused or still a little unclear, please ask me again. All right, I want to make sure, I want this session to be valuable to you, and I want you to come away with clarity, not, well, like, he didn't really answer my question really well. I want to make sure that you walk away like, okay, got it, clear. So, okay, cool. So thank you, Michael, for that. Let's see, for a buy stop, do you take 20% off the pre? Oh, so Michael, that's a good question. Making it work for a buy stop, do you take 20% of the previous candle? No, it's not that precise. I'm basically just looking at, I'm looking at previous price action when we make the market work, and I'm looking at also just where we are as far as whole numbers. So for example, something like on Bitcoin. If Bitcoin's at 10,500, let's say it's fooling around there, and there's a buy signal, all right, and the high of the candle is 10,525. Well, I'll probably put the buy order around 25 at 10,550 or 10,575, because I want the market to push somewhat. So I'm not using the exact percentage. I'm basically doing that on feel. Okay, I just want the market to work more than one tick above that previous high, because it's just, I'm trying to avoid the fake out. That's what I'm trying to do there. All right, so good question. So Jay Watt, do me a favor and check out CANE. Okay, cane, it's a sugar. Okay, let's take a look. So, well, usually with an inflationary environment, weak dollar is usually good for all commodities, right? And sugar's a commodity. I'm not familiar with this one. Obviously, it tracks sugar. Well, I can tell you right off the bat, you have a low in place, you have a higher low in place. All right, here, let me highlight that here. I mean, I don't follow these, so this is interesting. So you have your low and you have this nice higher low right here. This is not the greatest chart. It's very, I don't like all the sporadic movement. That just tells me that it doesn't trade a lot of volume. It's also inexpensive, which is good. Now you have a breakout that's taking place now. See this breakout right here? It took out this previous high. So this will lure a lot of breakout traders. You know, and breakout trades are a valid strategy, as we know, but it's a tough strategy because there are a lot of fake outs in such an area. In fact, for someone like me, I'm always looking for the failed high, right? And I'd rather buy the pullback. Now, taking something like this, you have to measure your risk from like basically like this low over here, which is what is that low? 567, so 550. Why take so much risk when you could probably get a better price? Now, I would wait for something like that. But yeah, is this thing strong and strengthening? Yeah, you have a higher low, you have a higher high developing. So this is good. Like if you're in it, this is good. This is a good place to start locking in profits. If you're not in it, I personally prefer to wait for some sort of pullback. Now, can I be wrong? And can this thing be bought now and you just watch this thing push higher? Sure, it can do that. But it's not the kind of risk that I like to take. It's really, this game is really all about risk, okay? And how much risk you're willing to take and how much risk you're not willing to take. I also know that there are so many other opportunities. I can find a chart with a much better setup, much lower risk, and much better probability. So definitely one for the radar though. I'm just not a big fan of the sporadic price movement. But thank you for pointing this one out because I'm not familiar with this one. Okay, so let's see what else we have here. Can you please look at Zillow? Z, okay, how will you trade this? And how would you gauge your levels? I'm not in it, but just want to know. Okay, sure, let's take a look. Z. So, Zillow. Now, similar to that Kane situation, right? Similar, here's what I see right off the bat. You broke out from here, all right? So you have this breakout and it's trying to follow through. All right, good sign, but you also have this resistance here. So this is pretty interesting because this thing is still in failed high territory. That's what I don't like about it. I would not buy this. I would not buy this at these prices. I would want to see a retrace, and I'd like to see that retrace. That the level that I would anticipate would probably be somewhere in the middle of this range. Here, I'll draw a line there. Somewhere in the middle of this range. All right, that would be one inflection point right there. The next inflection point, if that's cleared, would be around here somewhere. Okay, so you're looking at the failed low situation around that 53-ish, something like that. And then the middle of the range is around 60, you know, in those 60 and a half, a little higher than that. Now, keep something in mind. I don't know if the market will go back to those inflection points, okay? If the market provides that opportunity, I will be prepared. That's what I would look for. If the market does not provide that opportunity, I just go look for something else. That's the way you play something like this. And a lot of times, not all the time, but a lot of times, this thing will pull back to one of those inflection points. We see it all the time. And I have this talk with Andrew a lot because he'll be, oh yeah, I'm buying this right here. I'm like, why would you buy this when it can pull back? Because I like it fundamentally. Okay, fine. And then it pulls back. I see, you could have bought it at a better price. So it's a personal preference. I prefer to wait for those better prices. Again, I'm much shorter term oriented. I'm only interested in momentum for the next couple of days, next couple of weeks, maybe a month, something like that. I don't care where this thing is in 5 years. Okay, so that's how I would play this, you know, from the short-term momentum mentality. So I hope that answers your question there. Good question. So, and again, this is all about risk and personal risk preference too, right? Because everyone has a different risk tolerance. So good question there, DJ. ADVM reports on August 10th. That's good to know. Hopefully we're getting that pre-earnings pop, right? Okay, ASUR. Let's take a look, Hamid. ASUR. ASUR. Let's see what their story is. Okay, so software company. Interesting. Now, It's an inexpensive stock. That's cool. Now let's see. First thing I'm doing is I'm looking back a bit because I want to see the price action. What I see here right off the bat is range-bound market. Okay, so we have the range low based on this area here, and we have the range high. We have a couple of ranges, but the broader range high, this is your range right here. So you're looking at a range low of $4.90 around there, and a range high of around $9, right? Those are your extremes. Right now, you're in the middle of this range, and we can even find a smaller magnitude range within that range, right? The bottom of that smaller magnitude range is here, okay, which is, what is that, $6, which we basically prices come off of in the recent few days. And the high of that smaller magnitude range is around, I'm not going to use these pin bars, it's around here, because I'm looking for the common high, not these extremes. So you're looking at, what is this, 6.5. So you do have this broader high or low situation, which I like, but what's missing from something like this is the broader trend, right? You're in a broader range, and on the bigger picture, you're fooling around in the middle of the range. So, and not only that, but on this smaller range, you're near the high of it. So I would leave this one alone. I don't like the locations. If I was going to get involved in something like this for a long, I would want to see a retest of this minor range low, if anything, okay? The other scenario you can look for is a breakout and then a retrace of this minor range high, because perhaps it's going to work its way to the higher part of the range. But buying this thing right now is a reaction. And you know, this is what day traders are doing. They're reacting. Do not react to something like this. Wait for better prices, okay? Again, this is probably not obviously based on this price, this is probably not very, very sensitive to the market. I'm assuming that this is news pushing this thing, because look, the NASDAQ has been pushing high after high after high, and this thing is messing around with a potential lower high, higher low inside of a range. That's not great performance relative to the NASDAQ. So that's how I would, that's the perspective that I would go with on something like this. There's definitely better opportunities out there. So thank you for pointing this one out. I would wait for at least one of those inflection points before doing anything. Now, if you're in it, Hamid, I was going to say, if you're in it, well, that's a different story. If you're in this, and you got a decent price, well, this is a strong candle, okay? So it's always a good habit, and I tell this to all of our members, and a lot of our guys took advantage of this earlier today in a bunch of stocks, locking in profits all over the place. I was really happy to see that. It's always a good habit to take money off the table. Take something, okay? Even if it's a tiny profit. If you have 100 shares and you lock in 15 shares, okay? You lock something in on the highs while the buyers are there buying mindlessly, because that's what they're doing. So you lock some in, and then you let this thing ride, okay? Because this is a strong candle. There's nothing bearish about it. You want to let your winner run and see how far it goes. Once you start to get hesitation, perhaps you get a pin bar. Perhaps you get one of these red candles that develops, over the next few days. Then, you can lock some more in. Or if you want to try using a trailing stop, which, people ask me about a lot, I don't personally use them. You can trail from a couple of candles back, okay, the low of the candle. The thing is, you have to be prepared to give back a good portion of your profit in those situations, because you're trying to give the thing room to breathe. But if it really pulls back, you're going to get knocked out, and you're going to be like, oh, I could have made more money and blah, blah, blah. So you have to decide what's more acceptable to you. But at this point, I would let this thing run and see if it breaks out. If it breaks out, you're in good shape, okay? Because like the next inflection point, if this thing can really get going, if it clears this range, I mean, you're looking at this level here, which is what? What is this level? The mid, I would say the mid 7s, okay? So that's your next resistance after this range resistance. So that's a great stock. Great position you're in. So thanks for sharing that. That's how I would look to manage that one. All right. So cool. Let's see what else we have here. Good question. Let's see. All right. So that was Hamid. All right. Cool. XSPA was going to buy at 355. Okay. So All right, so we looked at that one. Could you look at RR? Okay, Rolls-Royce. All right, let's see. I guess that's better than F. I was really picking on F the other day. Is RR the symbol? I'm not getting anything for that. Why am I not getting anything for that? I'm not familiar with the C. Let me just type in Rolls. Oh, I have different symbols here. Okay. Let's see here. Rolls-Royce. So yeah, you're probably better off with F. All right, let's see. So Rolls-Royce. Interesting. It's inexpensive. You have a triple bottom situation developing here. This is a bearish stock. Okay. Oh, it should be RR, but you're in the UK. Oh, okay. So this must, well, it's over the counter. I guess RYCEY is the OTC stock that I'm seeing here. I would imagine the chart would be similar, whether this is you know, the OTC stock or whether it's on the I guess this would be on the UK exchange. The RR symbol. Okay. RR with a, okay. So let me see if I can get that. I should be able to get that on here, right? Let's see. RR. Oh, here we go. Got it. See, I'm not from the UK. The chart's similar. All right, the chart's similar. So here we go. Here's the chart. Thanks, guys, for clarifying on that. So I like this chart. I mean, here's the thing. You have a triple bottom situation, right? But let's see if you guys can see what I'm going to say about this. Can you guys see it? Can you guys see what I would like about something like this? Thanks for bringing this one up, by the way. Can you guys see it? What would I like about something like this? Let's see if you guys know. What would I like about something like this? I mean, we are fighting against the trend, right? We are fighting that bigger picture trend, but okay. More recent price action is showing a range, but what do I like about something? Why would I be willing to take a chance on something like this? Can anyone tell me? I know Michael knows. DJ knows. Yep. Look, Michael and DJ. See, I was able to anticipate your answers. Yeah, failed low. Not only do you have a failed low, not only that, but you have a pin bar. Okay, so this is nice. I mean, your risk can be defined by the low of this pin bar, which is, what is that, 212? I guess that would be pounds. I'm guessing. So you figure your stop would be maybe around 200 even or slightly lower. And you have plenty of reward potential here, okay? If you take out the high of this pin bar, which is 232, is the high of the pin bar, you take this out tomorrow, you know, or yeah, this thing has some potential. I mean, reasonably speaking, your next inflection point is around 292, all right, around that 300 area. So that's not bad, all right? Forget all this other potential. We're not even looking at that. We're just looking at what's within reason over the next few days to week. I definitely like the pin bar. I like the location. You're just fighting that broader trend. So, you know, perhaps it's wise to be a little bit more conservative with something like this, especially with tighter targets. You know, perhaps you take some out earlier if you can reach an even more conservative target of like around 258, 260, something like that. And then a second target, maybe around that 300. And then maybe a little bit more of an aggressive target somewhere up in this area. 330 area, something like that. But yeah, nice situation here going on. I definitely like that. So, oh, is that what it translates to in the U.S.? Okay, yeah, obviously it's an inexpensive stock. I mean the OTC one was cheap. The OTC one is very cheap, so I guess it translates. That's what it would translate to. But okay, yeah, definitely nice chart, nice setup. This is a nice setup, okay, with nice reward risk. Even though it's counter, there's definitely some potential in there and you don't have to take a huge amount of risk. Okay, so yeah, okay, yeah, right. So we looked at that. So it's similar. So I like this definitely. This is definitely a long setup that's developing. You can just wait for the candle to close or near the close of the day. I don't know if this may be closed because it's in UK time. It's probably closed. So you want to see this thing should take out the high tomorrow. And that would really be your reason to go long, okay? just be careful with something like this, because again, you're fighting something that is generally weak, but you're in a great location for a bounce, counter trend type of trade. But the other thing that I like about this too is, even though the broader trend is bearish, the recent price action is range bound, which means that bearishness is not as strong as it was. That bearish price action doesn't have the same emphasis anymore, because the market really stopped pushing those lows. And this could be just like all these shorts piling into it now, thinking the trend is going to continue, and they're shorting the bottom of this thing. Okay, so that's cool. All right, anyway, so nice. Thanks for pointing that one out. All right, let's see what else. Do I have any other ones here? Okay, cool. Okay, cool. All right, so I think I got everyone's stocks. This was a great session. I really appreciate everyone's participation. Do I have any other questions? Any other questions? Because we have our podcast. I have to start preparing for that. We have our podcast at 4:05 p.m. Eastern time, so it'll be here on the channel again. So I hope to see some of you guys there. And again, with the sound, if the sound is not so good, please let me know. If you're new to Greenbridge Investing, make sure you check out our website at greenbridgeinvesting.com. We have swing trade signals by text and by email. We have portfolio ideas that we share, which are much longer term. And we have a chat room where we share trade perspective, every day. Michael, sorry. Let me get into that one, Michael. SPCE. So we know this is Virgin Galactic. And I know this one, Andrew's been on top of this one a lot in the chat room. Been on his radar for a long time. In fact, he had this thing from a great price. So, good question. If it pulls back to 22, would we consider a long? All right, let's take a look. So now let's see, where is 22? Let's see here. 22. Okay. So, yeah, this is the 21.25 area. Remember, these aren't exact numbers. I always just kind of give like a ballpark, because you can't be exact with the market. It's always very noisy and very messy. So this line that I put on the chart here, that's right now, that's your support. Okay, it's an old resistance, it's a new support. And as you can see, the price reacted earlier. The price reacted somewhat earlier to it. And today we have this attempt to establish this higher low and push higher. Now, as far as buying at 22, what's today's low? 22.69. Well, you have a higher low in theory. Oh, that's good to know. Oh, an XRP, Shashank, I'll definitely get to that. You have a higher low, and in theory, this should go for a higher high. Yeah, in theory, based on where it is right now, what it's doing, it should go for a higher high, right? 27.54. So there's two ways to go about this. One, you can wait and see if it could give you a better price. It may not, though, because you have the higher low in place and today's candle is kind of strong. It may not retest that low. So one thing you can do in a situation like this, if you really want to be part of it, because your risk is not too bad from here, you're going to define that by about 22-ish. 22 is how you define your risk. This thing's at 22.60. What is it? 23.90. So you're looking at $2 of risk, maybe more, right? Because you're going to put your stop slightly lower than that 22. You're going to put it like maybe 21.50 or something like that. You have to give it some room. So you're looking at maybe $3 of risk at this point. And one way to compensate for that, again, is smaller size. If you normally buy 100 shares, you put on 25 shares, or you put on 15 shares. If it pulls back, no big deal, because then you can now average into a little bit more and buy another 15 shares or something like that. If it takes out your stop, well, you step aside, take the loss, and at least the loss would be smaller if you only had 30 shares on rather than your full position, right? That's one way to go about it. The other thing you can do is just simply sit back and wait and see if it gives you that failed low situation, because this thing may consolidate a little bit lower. There's no way to know if this thing is going to go for the high in the next leg. So I still have a lot of inventory. Oh, okay. Oh, cool. So in a situation like that, this is not a bad place to take a small bite, Michael, because you do have the higher low. Yes, it's not the best price, But if you're just averaging in, you're putting on more, you're buying more inventory on something that's winning, right? So that's okay. This would be a good spot to do it, because the next spot to do something like that would be the breakout. Okay, so you're getting a better price than the breakout. One way, so if you have inventory, perhaps you take a small bite here, and if it pulls back again to that 22 and holds and gives you another buy signal, you can put on the second half of your small bite. So if your small bite was going to be 50 shares, you do 25 and 25, something like that. So at least it averages out your risk. That's the whole thing. And if it has a real dramatic pullback, well, you know, that's going to be no fun either way, because your next, you know, that you're talking about, what is this high over here, the 16.5 area, that's your next support after, if it breaks this 21. Okay, so just something to keep in mind. But this thing is looking, you know, you have a higher low, I would anticipate the higher high based on what I see here. Plus you have this broad higher low. Look at this. Broad higher low. You see this? People don't recognize stuff like that. But this broad formation, I'm gonna this whole section right here, that's a broad higher low. So it led to the higher high, great, and now you're getting a smaller higher low. So I would anticipate another push higher, at least a test of the high is realistic. Okay, hopefully, Michael, if this thing starts pushing the highs, it would probably be a good idea to partial out of something, especially if you have a lot of inventory. You know, it doesn't hurt to take something off the table. You know, even if it's a small, you know, based on a 100 share position, you start, you know, take 15 shares, take 20 shares, you know, just lock something in while the buyers are there. It's never a bad idea. It's a good habit to be in, okay? So thank you for pointing that one out. Great stock, and nice hold on that. All right, so Shashank XRP. Okay, XRP. A lot of these altcoins have been popping in recent days, I guess thanks to Bitcoin. And these, I mean, look at this, right? Looks kind of like Ethereum. So these situations, right? This thing's fooling around right now at 31 cents. I have a resistance on this chart here in that area that dates back to March, right? The March high was 34 cents, and you're fooling around there now. This is definitely not a place to be buying this, okay? This is the herd mentality high. Whenever you see vertical moves like this, the first thing that you guys should think is herd mentality, okay? Herd mentality. This is people chasing, people reading some blog about, oh, XRP is going to double by, you know, next week, and it's going to be at $1. So they're all piling in now. All right. If you remember, I called XRP at 21 cents. Right. And that's Shashank. That was a great call. That was a great call. And you had what? 21 cents. Where is 21 cents here? That's around this area here, right? So you had that nice breakout, beautiful breakout. The other thing is, I mean, this thing is showing you recent broader structure that's bullish, because why do I say that? Well, you have this broader higher low situation right here, followed by this little minor higher low. Now, Ethereum looks the same way, right? This looks very similar to Ethereum. My point is now if you're in this, hopefully you're in this, Shashank, and if you are, this is a place to be locking in profits, okay? This is definitely a place to be capitalizing on these buyers who don't know why they're buying into this besides the fact that everyone is telling them to. This is a place to capitalize on that, right? Because you're going into this resistance zone where it's more likely to, you know, find some selling activity and perhaps retrace. So if you're in this, great. Lock something in would be a good thing to do. And then, of course, you want to try to let some run. Try to let it run. That should be your thing. Always let a winner, at least give it a chance. If it gives you a solid sell signal, okay, that's a different story. Now, these things can be tricky. I mean, look at this large range doji situation here. These can be tricky. All right, but you just be patient, let this thing run. But that's what I'd say about this thing. Not a place to put on a new position, but a place to partial out, lock in profits. And as far as a new long goes, I would like to see a retrace, just like on Bitcoin, just like on Ethereum, and a realistic retrace. I don't expect this thing to pull all the way back to 23 cents, although it's possible. Something like this, when this vertical moves start going, people start buying earlier, right? They don't wait till this thing pulls back. You'll see earlier buying. So that I would anticipate something like that, like around, what is this? The low, I'd say like the low 28s, maybe somewhere around there, for a earlier higher low. If we saw something like that, that may be worthwhile. But usually if we're going to do one of these, it'll probably be Ethereum. Okay. But anyway, nice position that you're in. Hopefully, like I said, you're in that, and nice job. So thank you for XRP. So I think now I got to everyone's requests. Do I have any other questions before I wrap this up? Because we have our webinar at 4:05, and I definitely have to start setting up for that. So I just want to make sure I got everyone's questions. I want to make sure that you guys leave this session with some clarity and some perspective. I mean, that's the whole point here. All right. So again, if you guys are new to Greenbridge, anyone that's new, make sure you check out greenbridgeinvesting.com. Make sure you subscribe to my channel here. Also, give me a like if you like the video, if you found it helpful. I want people to learn from this, and I want people to have confidence when they see these opportunities. Okay, cool, Joe. Thank you. Cool, DJ. All right, no problem, Michael. Again, it's my goal for you guys to come out of these with more clarity. So when you see an opportunity, you have the confidence to do something rather than hesitate or, oh, I'm not sure, or worse, become part of the herd and react to things like this, which, as we know, is not an effective behavior. Okay, cool, Shashank. So thank you all for joining me for this stream. Again, stick around for the webinar. I'm sorry, the podcast. Man, I got too many things going on here. Stick around for the podcast. And guys, Ankit, yeah, let me know if the sound is problematic, because I can't hear it. And it's very important to me that the sound is clear. Otherwise, it's really not a pleasure to listen to. Okay? All right. Thank you again, and I'll see you at the podcast. Enjoy the rest of your day, guys, and thank you for watching.